Hi, everyone. Welcome to another edition of All Access. So I have a slightly different thing planned for today. There is a lot happening in Avalanche, and normally I just kind of pontificate for a little bit, kind of share with you guys what's on my mind, which is fun. I always enjoy it immensely. And then we take questions and so forth. Today we'll do something slightly different. Not to say that there isn't, if I were to let the summary kind of dominate the discussion, I think it'd take an hour and a half just discussing what happened last week. Lots and lots of exciting things are happening. We have Banff. We have Banff 1 getting staged. We're going to soon have that coming out and making elastic validation even easier. And I think next week probably I will end up talking to you about elastic validation and what it means and how the Avalanche approach to scaling is so different than what everybody else is doing. It's just night and day. And that's probably a topic in and of itself. There is Core Wallet, which is a command center. It's something entirely different than a wallet, even though it does everything a wallet does. It's also a portfolio manager. It's also an explorer. It's also a way to jump from DApp to DApp. You don't have to go to a gazillion web pages. You don't have to be an expert at DeFi to navigate DeFi. So that's something that you all should check out as well. That thing is beautiful. It's so much better than MetaMask in every imaginable way. And it's somewhat you should be using to connect to Avalanche. So check those things out. But today I have a special treat. I have a guest. David Wells is here to talk to me about a topic that we've discussed before, which is Enclave, a revolutionary new way to do trading, a revolutionary new approach to building trustworthy services. And I want to jump into this, and I want to, if I'm good at this, and I'm not, well, I'm learning. But if I am really good at this, I would be able to tease out of David both the technical story and his personal story and the outlook for the future that he sees for the space overall and for exchanges and so forth overall. And then you guys can maybe judge me on how good an interviewer I am. And in any case, this is meant to be just sort of a fun discussion. And we will probably BS for a long time here, but I will try to also reserve some time at the very end for David and I to take your questions and kind of talk about them. David, let's just jump in. I like jumping in. I don't like those standard templates. How did you get into blah, blah, blah? We're not going to start with that. Let's start with exchanges. Everybody has heard of exchanges. They've heard of NASDAQ. They've heard of the New York Stock Exchange. They've heard of the commodities exchanges. They know that some people buy and sell pork bellies and other people buy and sell future oil and other people buy and sell Apple stock, etc. And of course, there are the crypto exchanges, the very famous things that bring us so much drama. Can you just tell us, the kinds of things that you have seen go wrong on these exchanges?
Absolutely. Thanks so much, Gün, for having me. And let me just mention that congratulations on episode number 40 today. And I think this is the 1-year anniversary of All Access. So congratulations on that. And I'm very honored to join you here today. So thanks very much. So this is a topic that's very near and dear to my heart. We can get into background stuff later, but I've had a mix of sort of traditional finance, tradfi experience, and then formally in crypto since 2017. And I think, everyone is always trying to find the right model for a fair marketplace, a fair transaction. So there's a bunch of different, price discovery mechanisms. You have auctions, you have order books, you have in DeFi, you have AMMs. So there's so many different models that people have experimented with to try to get to what is a true fair exchange of I have X and I want to trade it for Y, you have Y, you want to trade it for X. How can we do that in a fair way where we know that there's no sort of preferential, access or advantage or, information that you have that I don't. And, throughout most of our history of formal markets, you have essentially regulation that, tries to address a lot of these issues. And inevitably, market participants always find ways around them and different ways to do that, or they'll create a new instrument or a new marketplace to get around some of these things. And so what I'm very excited about, and I know I share this passion with you as well, which is how can we use technology to actually address technological innovations, especially in the realm of what we call secure enclaves, to address some of these issues where you don't have to rely on trusting a centralized operator or trusting the regulators to catch up with the market participants, so you can actually use technology to address some of these issues that I think we can get into. But let me pause there.
So let me pace us down a tiny bit. So I hope everybody got a very, very critical technical point out of what David said, which is that in any kind of an exchange, there are two things that could be happening. One of them is the actual matching. I have a chicken to sell. You want to buy a chicken. I want I want a rabbit for my chicken, and you've got a rabbit, and you want a chicken. So then that's the exchange, right? That's the process. Sorry, that's the match. The process of bringing those two people with equal wants and needs together, and that's one of the two big things that happen typically in an exchange. The other one is price discovery. And price discovery is the process of, well, look, maybe chickens are at a premium. Maybe you got to give me 2 rabbits for my chicken. And so, but it's an independent function, right? And I want the audience to appreciate the fact that deciding on the price is different from the match. And when we go to, I don't actually do this all that commonly, but when I go to the New York Stock Exchange, I can't imagine buying any of that crap. It doesn't move at all. It's just like the world's most boring asset. But when I go to buy, let's just say if I were to buy Apple. So I go to buy Apple. As I buy, I increase the price. As I sell, I reduce the price. The same for Bitcoin, right? If I buy Bitcoin, the price will go up, and if I sell, the price will go down. And then as I do that, the matching and price discovery are happening concomitantly. They're happening intertwined with each other. And that's sometimes what you want, but it's not always what you want. In many cases, the seller and the buyer are okay with some other external price feed, right? So we know, for example, that, one plow blade equals, a knife blade. And the knife guy will trade you for a, it's just set. And it just hasn't changed. It's a stable kind of a thing. And or we can just say, look, maybe it's not even a set thing, but we will take somebody else's benchmark for the price where we meet, right? So I think among everything you said, from a technical perspective, I want to pull this out, that these two things, for the longest time, until I started working with you, David, for the longest time in my mind, they were intertwined. And now I think it's so much better to be able to look at the market and say these two things are separate. And there are many cases where it makes sense to decouple these two things. So and the other thing, of course, that you said, which is a topic that has come up on this podcast in response to questions and so forth, is malfeasance in markets, right?
Yeah, absolutely.
It happens all the time. And
Yes.
do you remember the whole Dole episode? You remember this stuff, right?
Dole. What? No, which one is this?
Oh, this is I think Bob Dole's company, by the way. So people are old enough to remember Bob Dole. It's a company, and Dole Incorporated. They are publicly traded. They sell fruits mostly from Latin America, et cetera, et cetera. It's just a company with some number of shares outstanding, and they did for legal reasons they had to do a poll of their shareholders, and if you thought you were in possession of a Dole share, you were supposed to ping this one, whatever. There was a process, and you say, hey, I would like to claim my share. They had issued, if I'm not mistaken, 38 million shares of their company were outstanding. And then they did this thing, and then 53 million claims came in. This is a huge screw up. And all these people out there somehow believed to be in possession of Dole shares. And
sounds like rehypothecation.
It's not supposed to happen. This is not the kind of rehypothecation that is supposed to happen. So This is just plain old Wall Street lost track. They were supposed to, this is the most basic thing they're supposed to do, is keep track of how many shares are outstanding. Long story short, they have these systems for trading after hours, for trading when the circuit breakers kick in. Specifically. So that system for trading when the circuit breakers had kicked in had created some double accounting somehow, and many more people thought they were in possession of these shares. Huge screw up. You did not hear much of it. Mainstream media really buried this story, And just this is the kind of thing that happens. I don't know how many other people this affected. We just don't know. Dole had to do this legal thing, and many others did not. Maybe it got patched. Maybe there are, it's really, really problematic. The other thing, of course, do you remember? You might be too young for this one, but the market makers using the lowest digits of their bids to signal the prices to each other.
No, I hadn't heard that one.
Oh, David, come on. You pull me up one then. What are some examples of malfeasance? It's like, this happens all the time.
Absolutely. Yeah, I think
I like stories of fraud. I love stories of fraud, and I love looking into what happened. But apparently I'm the only one.
I'm a Flash Boys fan, so I think I know a lot about the generation of high frequency, low latency, and racing to the order book first. Which is another form of I would say type of malfeasance, but certainly front running is something that a lot of people can appreciate and have experienced. Particularly in crypto, but it happens in every marketplace. And this is essentially where somebody has some information or some preferential advantage or access to the marketplace and knows what you're going to do before you're going to do it, and so they jump in front of you and charge you a worse price than what you otherwise would have normally paid. And so there's all types of forms of this. In crypto, people are familiar with minor extractable value and sandwich trades, but basically the concept is the same. It happens in tradfi all the time as well. If somebody knows what your position is and what your trade is going to be, they can essentially jump in front of you and have you pay more or not get as much. Pay more if you're buying, not get as much if you're selling, because of this advantage, which is not part of an efficient market. It's purely just an asymmetry essentially. So whether it's a technical advantage because I have a better view of the order book before your order gets there, that happens a lot, and we've seen a lot of cases of that. Or it's an information advantage, which happens a lot in the OTC space, which I think we were going to bring up, which is I'm asking for a request for quote or for a price to some desk somewhere, and instantly that information is now baked into the market because I'm trying to get into or out of a larger position. And again, this is something that happens in tradfi markets and crypto. And when I joined crypto in 2017, the OTC world was all via Skype chat, and it was everybody kind of laughed because it's basically that tradfi still does it via Bloomberg chat, and so there's really not a lot of innovation there. And fast forward 5 years later, basically it's still the same in crypto, but it's done via Telegram chat instead of Skype. That's the only real difference. That was the main innovation. But this information leakage and the front running is still very much an issue in the market today.
Absolutely. So thank you for bringing up front running, sandwiching, etc. And as you know, as you mentioned, the name we have for it is MEV, right? So it happens all the time. I don't think you can buy on Uniswap these days without getting MEV'd, right?
Right. Yeah, I think that's right.
So even on DEXs and on centralized exchange, wherever you go right now, you could go to the most reputable, most solid of all blue blood, finance firms, and they're using something where you have to trust the operator, and there's information leakage. So I don't know how bad it is in TradFi. You sometimes hear of people taking large positions, and I think it's leaked. But we know for a fact that leakage happens all the time in crypto, right? So if somebody is getting into a big position, you just find out. If you're an OG, like the word gets around.
Absolutely. Yeah. And no, I think it definitely still happens, depending on the asset class. Like I said, regulation, they've tried to address some of these things with things like national best bid offer and BBO or best execution. You hear these terms where they're trying to solve for it, but there's always, these front running, these types of strategies are like water. They'll always find a way around that. So,
Right, absolutely. All these systems require you to trust someone, and DEXs, of course, allow people in a special position to jump ahead of you. So I think this is it's a real problem. It's a very, very real problem, and so I do want to jump into the solutions for this problem, but maybe this is a time to sort of take a breather and find out more about you. I understand that your origin story, or what led you towards crypto, was partly the fact that you don't want to see unfair markets. Is that right? So can you tell us a little bit more about how you got into crypto?
Sure. Yeah. So absolutely. Yeah. So in a previous life, I was actually an intelligence officer in the Navy, and so right around the time of the financial crisis, 2008 and 2009, I became super interested in economic models and understanding just the financial marketplace in general, because it was very confusing to me why my investments that I've been saving up for so long suddenly got cut, so significantly, and suddenly it was unclear if any banks were going to be able to give me my money back. So I became very interested in it, and realized that the even for all of the innovation and progress we've made as a global society, with internet and the information revolution, all those things, financial markets are still using very old technology, very old infrastructure, and processes that I think has led to a lot of the problems that we have today. And so I think it was this intersection of interest in economics, global macro economic systems, and sort of the way that drives society in general, more so than even geopolitics, which was what I was doing in the Navy. But I could see that the economics and then technology, which drives progress in economics, is what really is what makes the world go around, and what makes us progress. So went switched to the private sector, was really fortunate, went to business school right around the time, this is 2013, 2015. So Bitcoin was people were starting to talk more about it. Ethereum launched right around the time when I was graduating. And so I love this concept of a truly global marketplace that was using code and distributed systems where anybody could transact with anybody else in the world within minutes, seconds, now even shorter. But so that was super interesting to me, especially when essentially all the things that we've been trying to do with central banking system and all the financial sort of infrastructure that has been created, actually using a global technology, and the way that it was adopted around the world. It wasn't just like sort of a regional thing. That had me super fascinated. And so I first spent a couple years doing strategy consulting in tradfi for large financial institutions, insurance companies, asset managers, and certainly confirmed my hypothesis that industry is it's just so large, moves so slowly, that it's more likely, and this is something that we talk a lot about in business school, is it's going to be disrupted from entrepreneurs. It's not going to be changed from the largest companies in the world. These are essentially regular monopolies. So the real technical innovation.
Hang on. You talk too fast. I think
sorry.
You're speaking a little too. Are you from New York, by the way?
I've been here too long, 7 years.
You've
Michigan
been here too
originally.
long. Yeah. I see. Yeah. No, it's like that 50 Cent line always echoes in my mind. I talk a little fast, but if you listen real fast, anyway. So that one. I tried to listen real fast with New Yorkers, but we do need to slow down a tiny bit and talk a little bit about sort of the general things, the sort of the principles that attracted you to crypto. So what
Sure.
was it? What was it about the crypto landscape, the technology that really made it click for you? Was it the finality you mentioned? Was it the fairness, the openness, the transparency?
Yep.
Was it the potential to revolutionize finance? I don't know.
Yep.
There's like a bunch of things that you alluded to.
Absolutely. I mean, certainly all the above. I would say the first thing that really caught my attention was accessibility. Anybody with internet access could now participate in this new financial marketplace, essentially, without going through a gatekeeper somewhere. So
do you remember the days when a seat on the New York Stock Exchange was a coveted item, and you had to pay like $150,000 for a terminal, and and like the 15-second delayed feed was free, and but the actual real-time feed was like enormously expensive. I remember being an undergrad at Princeton, and I was excited about markets back then, and I was like, oh, it would be so cool to get my hands on something like this, the feed, an open channel, a telnet session to the New York Stock Exchange, whatnot, and it was so expensive, right? We were just cut out.
Yep, absolutely. So then you have to go through all these intermediaries, and you have
Yeah.
to pay each one of those intermediaries in order to ultimately reach your final destination, which is somewhere, on the stock exchange. They buy a share for you. But yeah, I mean, for really up until like, probably like the 80s, even just, being able to invest in anything other than government bonds was basically unheard of.
Oh,
You could
yeah.
buy, yeah, I mean, it just, you'd have to call your broker, and it was only for the ultra, high net worth that, if somebody owned a stock, like that meant you were super wealthy because you were able to access a broker who gave a damn to pick up the phone, right? Which means that you had to be in a certain echelon of society in order to do that. Otherwise, like, you can save up your dollars and hope they don't get inflated away, which they certainly did in the 70s, and now we're seeing that again
You're
today.
right. It's happening
But
again. Mhm.
yeah, it was only true access to these, investment opportunities. And today you could use the corollary of like private markets. Is sort of this way where you need gatekeepers in order to, or you have to be in a certain echelon in order to have access to things like venture, capital and private equity. But this was true for public markets too, even as early as 30, 40 years ago. So when I, knowing that sort of history, and then seeing the potential of a system that, regardless of like what language you speak or where you're at in the world, somebody, in a developing country that has no real institutions in terms of like rule of law or a good, any kind of like a responsible central bank or central government. If you have, the access to the internet on your laptop and then a smartphone, you can now, have this store of value, at least to start. But it's access to this ledger, this financial system that, basically everybody in the globe is participating in. It's 24/7. And you don't have all of these gatekeepers, and anybody can do it. So that was, for me, that was like super interesting. And then, getting into sort of the macroeconomic stuff, like, central banks sort of like manipulating markets and things like that. This seemed to be an interesting, alternative to that system. Not that I have a super strong philosophical view on this, but I was like, oh, this is interesting. Like, what happens to a financial system that's run on code, distributed globally, and doesn't have sort of like a central banker that's sort of like pulling, increasing and decreasing supply and things like that. So that was what attracted me to this in the first place. And then just the fact of seeing, how bad the technology was at these larger financial institutions. And it's basically just big tech debt that's accumulated over 50 years because they've been around for so long, and cobalt mainframes and all those
So
things.
I have to say something on this front. So let's see. Goldman is an interesting company. Goldman Sachs also has been called the vampire squid on the face of humanity. So I have a bunch of friends there, and they invited me to the 42nd floor, I think. And there are rumors that the 44th floor is where the lizard men live, where the tongue comes out and licks the eyeball and so on. I couldn't go all the way up to 44,
Haven't
but I
made it
went all
there.
the way up
Yeah.
to 42. And it's a non-marked building. They don't want to be a target. But I saw, through the friends, I got a glimpse of some of the code structure, and it's layers upon layers upon layers of very badly written code. And they do this thing called they manage what they call temporal databases, bitemporal databases. So there's the order that the database keeps itself, and then there is the external order that the database thinks happened outside, and the two need to be reconciled. I saw this, then I did that. Well, but that's not necessarily what's happening externally. That's from your own vantage point. It's one of the most biggest problems in distributed systems. So they need to compensate for this. And I just, I did this whole thing and did this like little, little glimpse into Goldman systems. And I left it thinking these guys so badly made the case to me for a blockchain that they don't even realize what's going on here. I didn't have to pitch anything. I just was like, tell me how you do things. Okay. I think you have proven to yourself that you need a blockchain. So it's coming. I don't know. I'm on a tangent right now, but those systems are really, really archaic.
Very much with you. Yeah, that to me, and I've done it when I was consulting lots of firms just like that, and I could see like there's no way like you're going to have innovation from within, from the inside. Oh, whenever you're making your board pitch and your board deck, you have to always put in, the key buzzwords and say you're investing in, AI and machine learning and blockchain, but like nothing was actually happening, right? It was very clear that like the disruption was going to come from outside the system. And so that led me to jump to full time into crypto, and it wasn't even just like the native crypto assets. It was, you know, using that technology, that infrastructure. It was clear that that was going to be the new rails, you know, for all assets, not just, you know, I mean, you will have, you know, futures, commodities, you know, equities, fixed income, credit, all of these things. They are all going to move on this new rail system of blockchain. Because, you know, what currently exists was basically developed in the, you know, from the 20s to the 40s, you know, maybe 50s, something like that. But then it just completely stopped. The innovation completely stopped. So so that was exciting to me. It wasn't like this is a, you know, 3 to 5 year opportunity. This was like you know, we're going from like horses to cars, you know, type of transformation, but in you know, in financial services and the economic systems.
Okay, and then tell everyone. I noticed now that your name tag doesn't include your title. So tell everyone what you do now, and you know what the connection is to how we start the convo. So you are now.
Yeah. So now I'm CEO of Enclave Markets. We just came out of stealth mode about a month ago. So if you haven't heard about us, that's okay. We're here now, and you will hopefully much more. But we are the world's we've launched the world's first fully encrypted exchange. So FEX, which, you know, I know you have talked about on All Access, and really appreciate.
But I call it FEX. What do you call it?
FEX, exactly. FEX. I think FEX is right. Yeah.
DEXs are good, DEXs are good, and FEXs are good. And then CEXs, I just have to say CEX because in polite company, if you say, you know, so you don't want to say sexes are terrible or what have you, you know, it's just weird.
Could be confused.
Into the gender fight, which is like the last thing you want to ever touch. So yeah, CEXs, DEXs, and FEXs. Okay, tell us a little bit about FEXs. What's a FEX?
Absolutely. So so FEX is, it brings together characteristics and I would argue like the best characteristics of centralized and decentralized models. So essentially the platform for the exchange, you know, the matching engine, the account management system, all of those things that exist within any exchange model, it all is built within what's called a secure enclave. So we can get into what that is, but this is a pretty cool technological innovation. It's actually a hardware innovation that's happened in the past, you know, few years. And essentially, it is a, you know, physically separate security environment that exists within your broader sort of cloud environment, where once deployed, it is essentially a black box. It runs autonomously in the same way, similarly to how a smart contract would work, but this runs, you know, off chain. And so the entire code base for the exchange, the trading platform, is built within the secure enclave. It's becomes fully encrypted once deployed, and now you can basically cryptographically prove through something called attestation that there is no party that has visibility into this black box that shouldn't, essentially. So, you know, if you're a market participant, you have visibility into your orders. If in the model where the order book is lit, you can see that, but you can be guaranteed that no one has, you know, unique or preferential access into that marketplace who shouldn't. So it's a truly fair, neutral marketplace. It runs autonomously. So in the Enclave case, we as the operators of this, we do not have visibility into, you know, your order flow that's any different from any other participant. We don't have any sort of internal market makers, so you don't have to trust us as the, you know, exchange operator. We've taken the principles of decentralized security and privacy and put those into this secure enclave model, which runs, you know, autonomously off chain. So you have all of the benefits of the centralized model in terms of, you know, fast throughput, instantaneous settlement, private order flow. So there's no, you know, MEV or front running because these things happen off chain. Not that the DEX model is wrong. It's just there are different use cases. Sometimes you might be fine if your order flow is on chain and that's okay for you, and maybe you're not sensitive to various forms of like MEV and front running. But, you know, I come from some of the funds I've worked at, like a quantitative hedge fund. They are very sensitive to their order flow. And in fact, if you could see the order flow, you can actually, you know, infer or reverse engineer into the strategy itself. And that is your entire intellectual property. That's your alpha, essentially. So this model is meant for market participants who don't want to have all of their order flow sort of fully on chain and visible and be able to front run.
So
But
slow
it's
down,
still
slow down.
go ahead.
Yeah.
Mhm.
No, go ahead. Go ahead. Finish the sentence. Finish the sentence. But give me.
Yeah,
Give
no, I
me
was just gonna say, yeah.
a,
So runs off chain, but you still have those protection, those guarantees of we are not the sole custodian. We could not, as the operator, go in and take your funds. We couldn't rehypothecate them and lend them out to someone else. We can't even change the code base ourselves or make updates without going through a process of the attesters sort of approving a new version of that.
So let's make sure everybody understands this, because most people are probably operating under a model that got antiquated when these secure execution environments got introduced. These things have been with us for about 6 years now, maybe 7 years now, and every hardware manufacturer is now building these things because there's a great demand for them. Some mobile systems have them, and so on. But let me tell everyone what the key thing is. Normally, in the sort of setup that you and I are used to, when I have a laptop and I run something on it, you have no way of knowing what it is that I'm running, right? I give you an ability to send messages to me, then I send response messages to you. You have no idea what I did with your data, with your information. You have no idea what I did on my side. You have to trust me. If I'm Zuckerberg and I say, yo, give me your information, and then I turn around and sell it, monetize it, chop you up, you train models, I take your pictures, I track you as you walk down New York City, etc. All of these things do happen. They do it. And, if you have to ensure that if you don't want them to do this, it's impossible essentially, because it's just all back-end stuff. You have no idea what is running on the service side of a client-server connection. Okay, so us, the clients, are beholden to the servers. It's just like medieval Europe. There's some guy, Zuckerberg, he's sitting on top of a hill. You and I will just submit our data to him, and then every now and then I don't know what he does for me anymore. I don't use that service much at all. But every now and then I get a message from my aunt. That's my way of connecting to people. But otherwise, he can do whatever he wants, and we can't hold him accountable. And with the technology that David is talking about, we have a new primitive that heretofore was not available to anyone. So until recently, we just didn't have this, and now we do. And so what is it? So I have the ability to connect to a machine that David operates and ask the machine, without involving David at all, yo, Chip, tell me what it is, the hash of the code that you have running in the secure enclave. And I can get an answer that I can trust, if I trust the chip, of course. I get an answer, and the answer contains the hash of the code. David I'm going to assume David is malicious. I typically assume everybody is malicious, right? This is crypto. So assume that he's hacked the code. Well, if he's hacked the code, then the hash is not going to be the hash I expect. And if the hash is in line with what I expect of code that has some property, this is some code that's written to not allow anybody to jump ahead of me, then suddenly I am able to do something I never could before, right? I can, without having to trust anyone, I know what the service is going to do. I know which code base is going to follow. I know that David cannot interfere with that. All of the data that the code keeps is encrypted to the code, not to the owner of the chip, but to the code running inside the secure enclave. This is mind-blowing. It's a huge step up. And as an academic, I try to sort of get the distributed systems community to rally around this, because it can rule out what we call Byzantine failures. I no longer, when I run a service, I don't have the ability to respond with anything. I have to run the code. I mean, I am running the code whose hash I told you, so it will only do those things that are encoded in its code base. So that is an amazing step up. And so David, using this stuff, what did you build? What's the first product? Let's talk a little bit about Enclave and the very first thing you went to the market with.
Sure. Yeah. So Enclave Markets, what we plan to build many different, products and markets, within this fully encrypted exchange model, CEXs. Our first product that we're very excited about, just announced a few weeks ago, called Enclave Cross. So this is something that's super interesting. It's a new exchange model in crypto. There's versions of it that have existed, and it's inspired by a model that has existed in foreign exchange markets and equities for a while. So it's a proven sort of economic model. But essentially, at a high level, Enclave Cross, it's a fully confidential platform. I'll explain what that means in a minute. And it uses something called pricing oracles to determine a market price at which all market participants will be crossed or filled at that market price when they meet in this in Enclave Cross.
So you and I want to, so let's take a scenario. I want to buy, I don't know, I don't have this much money, but whatever. I want to buy $1 billion worth of Bitcoin.
Yes.
And let's say Kevin wants to sell $1 billion worth of Bitcoin.
Yep.
Not that he has that much money, but whatever. So let's for a second.
Yes.
So then,
we have one.
What do we do? Yep. We come to Enclave.
Yes. Come to Enclave.
Yeah, go ahead.
Yeah. So very tactically, first, it's a permission network, but it's anonymous. And so let me explain what that means, because it can sound a little counterintuitive. So we do onboard, to make sure that they're good actors, and do the typical on-chain screening that's required. Once you're onboarded, you fund your account, and the way that you do that is we give you a deposit address, you send in your funds. Those funds are secure in the secure enclave. So I, as the exchange operator, can't go and take your funds. I can't rehypothecate them, as I mentioned. I can't lend them out.
So even your sysadmins, if they turn if they decide to launch an insider attack, would they
it's like you said. We assume they're malicious, and they cannot. They don't have any other visibility than what you have as a user into that system.
Will they know how much money I have in your in Enclave?
Nope, they will not, because you can have different deposit addresses each time, and so there's no way to be able to track that unless you give out that information. Yeah.
Even the sysadmins who are running this machine, etc., they have no idea what the users are doing in terms of funds motion. Like, they don't know the addresses that the machine exposes. They don't have access to the master secrets. They don't know anything about, and it's not even custodial. So David Wells could not take all my whatever $1 billion worth of BTC and run away to India, fake his own death, or whatnot. Not that has ever happened, or we would ever suspect that anybody would do that. There is no reason for that. No, I'm kidding. Of course, there's plenty of reasons. So in any case, okay, those of you who have not seen the documentary, there's a great Netflix documentary about Quadriga, and it's worth a look. These kinds of things happen all the time. David, actually, there's a very Western bias to crypto Twitter, but when I travel, there are a whole bunch of regional exchanges, and these things fail all the time. I think a lot of them just genuinely fail, and quite a few of them, they have they have somebody in charge take the coins and disappear. Sometimes the attacks are insiders. I think one of the devs working at the exchange steals money from the exchange, but they end up getting hacked all the time. So this one, it's non-custodial. So the custodianship of the coins does not rest with the operator. It's with the code. And so then tell us, what else does the code guarantee?
So the other piece is full privacy, and this is an interesting. I mentioned confidential marketplace. So this is a model where typically you go to an exchange, you deposit your funds, you submit your order. Now your order is on the order book. In this case, the use case here is for people who want to submit an order, but without letting the market know that order is out there. Because if I were to go and submit a $1 billion Bitcoin sell order right now, I don't care what order book it is. It could be the most liquid order book in the world. It is going to move the price, right? Like very significant. Yeah, just by putting it on there. Maybe I could do an iceberg order to start with 100 million. It would still go down, a lot, 10% plus, something like that, before any trades happen whatsoever. So in this model, you could submit your $1 billion sell Bitcoin order into the order book, and no one knows it's there. So then someone on the other side shows up. So you mentioned Kevin wants to buy $1 billion of Bitcoin. He shows up. When he's going to submit his order, he doesn't know at the time whether or not there is liquidity there for him or not. So he will submit his order. And then if he submits it for $1 billion, you are crossed, you're matched at the market price, which we can get into. But that pricing is not based on what happens inside Enclave Cross. That's a universal view of the true theoretical midpoint, the market price of Bitcoin at that time. You'll both be crossed, and so you're both notified that your order was filled. Congratulations, your order is filled. There was zero slippage. The price of Bitcoin did not move anywhere on any marketplace. You're happy because you sold $1 billion at the top of the book. Kevin's happy. He bought, and you don't know each other. You just know that you were in a pool with other good actors. And so I'm not worried about what your intentions were. If you're Satoshi and you're selling, you wouldn't know that. So it's a truly private marketplace. This model has worked super well for many years in equities and foreign exchange. And it's really to protect investors from these issues of front running and manipulation, things like that, where if you know the intentions of someone, especially the larger your order get, the more of an issue, these information leakage, slippage, and then there's a ton of other follow-on market impact when you do a large order. So it's not just that you're sort of clearing an order book somewhere, but now the algos start to spin up because they think, okay, this means something's happening, so I'm going to amplify that effect and drive the price down even further. Or up, depending on what your action was. So all of those follow-on effects, those side effects of doing a block trade or a large order, are taken away in this model here, because you were a natural seller, and then the other side was a natural buyer. So you both truly just wanted to cross at the market. And today, what you would have to do is you would go to an OTC desk. You would pay X% in slippage, and the OTC desk would start to trade ahead of you, most likely. And then similarly, at the other side of the trade, they would have to pay a similar slippage going the other way. So essentially, the middlemen there, the liquidity providers, are the ones who are winning in that model. So this is a little bit disruptive to that.
It's not just a little bit disruptive. It changes the complete game, right? So I don't know if I should. So every time when I go to sleep at night, I think about how to characterize this new invention. It's kind of like an exchange, but it's not really. It's like an entirely different thing. It sits, in my mind at least, I kind of think of it as sitting in front of an exchange. So I would come to Enclave.Market, and I would send it my buy or sell or what have you. I'd send it my order, and if it's fulfilled, I'm super happy. And then maybe I let my order sit for a while, and then if there is no confluence of interests, then maybe and only then would I go to let's say a regular exchange, traditional exchange, and start doing things there, or only after that would I go to a DEX and start hitting getting MEV'd and so on. So at least that's how I think of it. It's like an OTC desk on steroids. It's really good, it seems, for a couple of entities. So I know there are a bunch of OGs who listen to me every now and then. So people whose size is size, in Do Kwon's word.
Famous. Infamous.
Right. If you've got a huge chunk, like if I'm buying $1 billion worth of BTC, I will fight against myself and the bots as I do this. I definitely don't want that order. Yeah, sure. I would have interns if I were in that. I'm not a trader, by the way. So, I very, very, very rarely do anything. I do buy NFTs and never sold an NFT. But suppose I was one of these high rollers, size is size. I would probably end up having to do all sorts of funky things, like chop up my order and slowly send it to every exchange and so on and so forth. You don't need any of that stuff, right? All you need is, here's my order. I want it to match for the next 6 hours, eat into me. I don't care. And I'm happy trading in a band. As long as the price is in a band, I'm happy trading. So that's the sort of the right.
That's exactly right. And I think you pointed out an important note that this question comes up a lot. So you can get partial fills. So if you have $1 billion, to get done, if somebody comes in, $100 or $1,000, $1 million at a time, there will probably be a minimum order size to prevent sort of lots of pinging. But you can get partially filled along the way. you're always sort of like willing to take the top of the book price. And so these partial fills are going to get filled at the market price at that time. So if it's over 10 hours, you'll have in 10 fills, you'll have 10 different prices, but there's no slippage. You're just, you're not moving the market. And it goes to your earlier point about the difference between price discovery and then just matching supply and demand. So the goal here is not price discovery of Enclave Cross, which is why I agree it's not an exchange in that respect, but it's a marketplace to match buyers and sellers who don't want to have an impact on price, but they just want to trade with each other.
Right. And then, so that's one use case, like OGs with big pocketbooks. Another use case might be large treasuries, foundations, funds, and so forth. When a fund is doing things, they typically don't want everybody to know. And I assure you, everyone, we get to know, we find out. We have friends. Everybody has friends. And if somebody as clueless and as tech oriented as me gets to find out about movements in the space, rest assured, all these super shark-like traders, they all get to know as well. So when Barry Silbert is doing something, then the word gets around, and Barry starts doing things against himself. Whereas if he were to go through here, he would be able to do whatever he's doing with full confidentiality. So not anonymity, but full confidentiality. So and then what's the value proposition for small investors? Suppose I want to trade like $300 worth of I don't know what, something.
Yeah, absolutely. I mean, I think even a small investor, you're still going to be dealing with versions of MEV and being front run and these sandwich attacks. You're going to be paying a price, in whether it's in slippage or or the actual sort of mechanism like the MEV or the front running. But you are still you're still paying these transaction costs, and a lot of them are hidden. And that's I think when you're thinking about is this a fair trade or not? Okay, I'm willing to pay some trading fee that is very clear and transparent to me, and I agree to that, right? And that's how our pricing model will be. Right now, there are no fees, but when there's hidden costs, and when I feel like somebody's pulling the wool over my eyes, that's when that's when it doesn't feel like a fair transaction. And so in this model, regardless of how large or small, you don't have to worry about any kind of slippage, any kind of front running or manipulation, and you can essentially, it's like a swap. If you can swap between different assets, and if there's liquidity there, you get filled immediately. If not, if you have a duration window that you're willing to have a resting order, then you'll get filled over time. But I think that the value prop is there for both large and small market participants.
Yeah, no, I agree. I think the loudest thing I heard in that discussion is zero slippage, right?
Yeah.
Often
Exactly.
I want to be able to just do something, and I want it done at the market, right? I'm okay. Like I've looked at the market conditions. I've decided I want to have a trade happen, and I'm okay with the market order, as long as nobody is taking advantage of the information in my order, right?
Right.
And
Exactly.
and so this is what this guarantees. So it's pretty exciting. So tell us a little bit about where you are with Enclave.Market. Is that the URL for this thing?
Yeah, trade.enclave.market, or our marketing site is Enclave.Market. That can take you, just click launch the app, and then that'll take you to trade.enclave.market, where the Enclave Cross is.
The launch happened. Let's see. There's a wait list now. Is that it? Tell us about how many people are on the wait list. Am I allowed in? I think I'm in. Right? You whitelisted me.
I think you're on the whitelist, Goon. I'll
Okay.
double check on that, but especially after your generous hosting today, we can make sure and get you on the whitelist. But so basically, we launched in beta mode, as a lot of products do. We're collecting customer feedback. We launched we announced a couple handfuls of institutional partners, and then on the individual and institutional side, you can sign up for the waitlist on Enclave.Market. But we're adding users to that relatively quickly. So the response was pretty incredible. So well over 1,000 users on the wait list. We've been adding, give or take 100 to 150, 200 per week. And so over the next few weeks, we should get through most of the wait list, although it continues to grow. But
No, it's going to
yeah,
grow. Look, everyone, you want to be on this wait list, so get your account already. It's like, remember early days of Gmail? It was cool. And
that's right.
So check this out. Be one of the early people to use it. So is there going to be an airdrop? No, I'm kidding.
When airdrop? That's a great, yeah.
Don't say a word.
We get that question
Do
a lot.
not say a word.
Right. Yeah. We have a Telegram channel too that's growing. With that question comes up a lot. When airdrop? When token? Yeah. No plans on that front right now.
No plans we know of.
Right. But yeah, no, it's been great to getting the user feedback. It's interesting because like
all right, look, you're gonna go highbrow on us. Okay, so let me take it down a notch. And just mention that one could make a lot of money, not a lot, but one could make significant money. How about that? Just being early users of new systems. So there's always value to be had. And even if you don't actually directly profit, you will learn something. This is actually technologically interesting and different. And it's kind of easy to use. You connect your Core wallet directly. If you don't use Core, you connect MetaMask directly, right, David?
Mm-hmm. That's correct. Yeah, or Wallet Connect. So
yeah. And what can I do once I connect? I can trade things. What things can I trade?
Yes, so we're integrated with Avalanche Ethereum. I think we mentioned earlier, but we have the ability to be cross-chain. And so from a technical standpoint, we have the capability to support anything EVM. Right now, it's Bridge BTC, RAF BTC, AVAX in ETH, and then USDC is the stablecoin that we're trading against. So right now, just a small number of assets, but we plan to expand that list pretty significantly.
Yeah, that's the question. So why wouldn't you support every pair?
So eventually we will. I think right now we're aggregating liquidity as we get going. Yeah. But yes, we definitely plan to grow that list significantly.
That sounds exciting. So okay, so then the vision I have is that this is an engine that, in my mind, at least sits in front of all these big centralized exchanges before I go to Binance, before I go to Coinbase and whatnot.
That's right.
I should hit this machine up and see if I can get matched immediately with zero slippage against somebody on the other side of my order. I often find myself wanting to do things in the exact opposite of the crowds anyway. So if they're selling and I'm buying, that's a good match. And if not, also it's a good way to find out what the crowds are doing. Right? You submit your order. If it's not immediately filled, then you've learned something. Then you learn that you are with the crowd as opposed to against the crowd. So so there's value in discovering that as a user. The cost to me to discover that is the minimum order size. Is that it?
Minimum order size. That's correct. Yes. And right now in beta mode, we have that super low. But yeah, we do think like
low? What's super low?
People might be afraid I think you could do like $1 right now, something like that, the equivalent of like $1. It's
really
very low. Yeah. So come one, come all. Try it out. So, basically, we want people to try this out and get comfortable with because it is a little bit different. It's not, to be clear, it's not a limit order. It's not a market order. It's a crossing order. So it's a new order type, but I think people are going to really like it, and it's very simple and easy to use, as you mentioned.
Great. Okay, so if you're a degen, there's no reason to not use this, especially in this current incantation where the minimum is $1, et cetera, et cetera. So come check it out, everyone. It's well worth a look. Can we chat? We're over time as usual. This always happens to me, but I always enjoy this, and I'm enjoying it with you. So let's talk a little bit. One question I still have for you is, I think we need to pontificate about the future of exchanges. Where are they going? I mean, until recently, we always were beholden to Mt. Gox style CEXs, right?
Yeah, and, great point.
I got, and this is like back in 2014 or something. I said something like, I think Mt. Gox had not crashed back then yet, but I was saying something like, the natural resting state of every exchange is empty, right? So you leave an exchange alone, that's where it wants to go to. I always look at distributed systems from like this physics perspective. What's the low energy state? This is how Avalanche consensus also works. In a low energy state, the system has decided something and will stick to that decision. It's a good state. Well, the resting state of an exchange is it's been emptied out by a hacker. So
Mm.
so that's really problematic. And so centralized exchanges are really, really problematic. DEXs, well, DEXs are like MEV territory. It's just,
Mhm.
all these like, little kids are, they have fancy names, MEV searchers, etc. They're just trading against other people's interests. Like
Mhm.
retail's getting screwed there.
Absolutely.
MEV is
Yes.
not a good thing. Taking advantage of MEV, you're really like robbing someone else who was honest enough about their intentions. They submitted a request to the chain, and some jackass is coming in between what the current state of affairs and what somebody wants to do, and they're
Mhm.
they're typically taking advantage of their unique status in the network to jump
Mhm.
ahead of someone. If somebody did this, in Port Authority, they'd get smacked. You want to jump the line in New York, someone's gonna
Good luck.
from you, right? At a minimum, you'll
Right.
get spat upon. You don't
Mhm.
do that. But somehow you go downtown, and in FIDI, this is like, oh, this is what we do. This is our line of
Tuesday.
work.
Yeah.
Yeah, it's a Tuesday. It's every day.
No,
They
yeah.
jump ahead of you.
Yeah.
You go to a DEX. It's supposed to be cool. Blah blah blah. This is a supremely uncool operation to jump ahead of people. So
Yep.
so these things are ruled out. So sorry. I was heading towards this thing. So
Mhm.
in the future, what should we expect of exchanges? Where are they going? How are we going to see tradfi exchanges evolve? How are we going to
Mhm.
see DEXs evolve? What do you think is going to happen?
Yeah, love to think about this. This topic. I would say we're moving in the direction of more autonomous systems, and where what we mentioned earlier, where you're using code and you're programming in the protections for investors instead of relying on agencies, regulatory agencies and things like that. So I would say the general very high macro level is we're moving towards more automated systems that run sort of autonomously, like the FEX model. I think you'll see, it's interesting to see like crypto infrastructure, but then tradfi market structure. Those models are merging a bit more, and so the Enclave Cross is a great example of that, where it's inspired by the concept of, like, if you look up a crossing network or a mid-match pool, there are certain elements that are similar, but yet it's using crypto infrastructure. It's not, in TradFi, it's like bilateral. So there's all these, crazy legal agreements that they have, ISDAs and things like that they have with each other. We don't need any of that, because it's all, it's fully funded. There's no settlement risk. And it basically, we're using the crypto infrastructure and technology to address a lot of the issues that they're using, paper over here in Wall Street, to address. But there has been, over the hundreds of years of marketplaces, there has been innovation in sort of market structure models, price discovery, and matching supply and demand. And so I think some of those concepts will inspire the way that we trade assets digitally. But the underlying platform will be using distributed systems and a more global marketplace. The other issue is marketplaces today are so siloed, and so that means everything is fragmented. It's only really foreign exchange markets, and then some of the commodities look and feel more global. But even in like oil, there's like the London price and there's the Texas price, and so liquidity is fragmented and siloed all over the place across various different asset classes. Probably most pronounced in equities, because every jurisdiction has their own regulatory framework. I think the future of exchanges is a full global marketplace, everybody operating on the same type of infrastructure, and using code to address these problems that right now we have the legal system doing.
No, fully agreed on all of that. I think exactly. I think we're going to see code take over the task of regulation post facto. It's so hard to be a regulator. Like, it
Mhm.
is so impossibly hard. Imagine that you and I were brought in to any exchange, to a Wall Street exchange, and we have to answer the question, did something bad happen here? It's
Right.
so hard. Like, I don't know where to begin. I
Yep.
would literally would have to see the code they're running, would literally have to sit on the wire in real time to detect most of these things that are happening, that could be happening. And post facto, there just isn't enough evidence to tell one way or the other. And with attestation, you don't have to do any of this. You just say, by construct, by creation, this thing cannot misbehave in the following ways. I never have to check for this again. I've audited the code, and therefore I don't have to audit the behavior on a day-to-day basis. Huge difference. I don't know how to explain this to a non-techie, really. I do try, but it's just night and day between how things used to be done and now how they could be done with crypto's help, with secure enclave help. And yeah, and I cannot wait to see the new products. What's on the product timeline map, what have you, of Enclave going towards the future? Like this secure enclave technology could be used for a whole range of other things. In fact, we use
Absolutely.
it for the bridge that we have between Bitcoin and Avalanche, between Ethereum and Avalanche. We use the exact same technology for ensuring that the bridge is well behaved. And so tell us a little bit about your product timeline.
Yeah, so we haven't revealed too much of the future bigger products, but this is of course the first of many different markets that we plan to launch, and so there's a bunch of different ways to go. I think what's really interesting, what's sort of underserved are, and this is a little bit further in the future, but around derivatives, futures options, those types of things, I think is super interesting because it's pretty underdeveloped, I would say. In crypto, and the way that it's being settled is still very tradfi, I would say. So I think the FX model is perfect for those longer term, but you can envision potentially spot markets or other products that are similar to cross. Specifically for cross, as I mentioned, we are definitely going to expand the asset list. We're going to expand features. So we have a couple of cool features. When you log on, you can try it out, but it's protect yourself if the price moves too far, just cancel my order, or you can pick a duration window. So I think there's a few other features that we want to bake in there so that investors and traders feel comfortable submitting the order and having a resting order there. So I think we have some features to build out there and some integrations to do with various partners. You mentioned, you might want to ping Enclave Cross first if you have a block to get done, and then trade at other venues as well. So you could imagine like an order routing system where we would be one of those inputs. You ping Enclave Cross first, and then if you want to trade the rest away, you can do that. So I think we have some very interesting integrations there. And then very near term, we're in what I call beta mode, where there's sort of like a max order size. I think over the next few weeks, we'll be adding folks off of the wait list, taking in user feedback, and then moving out of. You mentioned Gmail. I think they were in beta mode for quite some time. We won't be in beta mode that long. I think they were in for years, but so we'll be out of beta mode relatively soon. And then you can trade as much size as you want if your size is size.
Sounds awesome. So let's take some questions from the audience. I know we're over time, but you have a little bit of time. Let's do this. Oh, a few questions was good. I usually like to go down the line and see. The very first one is, did you hear about Gavin Wood stepping down from Polkadot CEO position? Yeah, that's a question. And did you hear about this? This happened this morning.
I did not hear about that.
Gav stepped down. It's I don't know what to say. Like, if that's the right thing for him, kudos to him. I can't imagine stepping down from what I do. Right? What would it take for you to step down? This is a question, right?
Yeah, I don't know. I can't really. I don't really contemplate those types of things. If we failed in our mission to protect our users, that's the one thing. But we don't want to contemplate that. But that's our reason for existing, right? So that's the most important thing.
Yeah, I can't imagine that. I've mentioned this on the podcast before. I do pay attention to where the founding team is. I pay attention to their background and what motivates them. And if they're motivated mostly by money, and you can so easily tell, then they tend to do funny things. They tend to be located in a tax haven, for one. So, they're not going to be in California or New York. They're going to be in Texas. They're going to be in the Bahamas. They're going to be somewhere far away. And so that's one big red flag for me. But the bigger red flag is they're just in it for the money. So this is a field where people get money very quickly early on, and then they disappear, and then suddenly it's kind of like, oh, you bought into I'm not going to name the name of the company, but there are some companies that are famous for canceling products, right? You go in, and then a few years later they cancel that product, and then you're out on your own. So this happens in crypto all the time. I just can't imagine. I think if Avalanche was number one, and hopefully that's what I'm working towards, I'm okay with being number 2 or 3 if the things above me are stable coins, by the way. That's okay by me. But if I reach that point, and then and then we stay at that point for some time, and there's clear technological domination, then I think it's time to think about taking time off. But yeah, I don't know. In my family, I don't have any good role models of people who successfully retired. We all tend to die on the job and do it lovingly. So that's my model. Anyway, but kudos to Gav. I think everybody should do what's right for them. But yes, I had heard about this, and I thought about, well, what would it take for me to do this? And I'm like, it's unthinkable. It's a weird question. What would happen if water flew upstream or whatever? It's just a strange question for me. The premise is weird. Thibaut Clement is asking, are SGX cards involved only in the security of the bridge? So SGX is not a card. It's not something that's external to the CPU. It is inherently a very embedded in the sort of the core-most point of a CPU. So it's on the same. I don't have I have an example. I typically have some hardware lying around, but I cleaned my desk recently. So it's inside your CPU. So it's not an external thing. If it were external, there might be. It's an attack vector. Somebody could potentially attach wires between the CPU and the secure computational unit. There used to be these chips that were external. They were called trusted platform modules, TPMs. And laptops still contain TPMs, but that model is not as strong as security embedded into the core of the chip. So it's not cards. Let's correct that a little bit. But the question was, are they involved only in the security of the bridge? No, they're involved in all sorts of things. So Intel is doing something really cool with regard to patient data security. So they have a bunch of hospitals with DNA data. The DNA databases are kept inside SGX enclaves, and then researchers submit requests. The requests go to all the hospitals, and answers come back. Answers are filtered, so the DNA sequences belonging to the patients don't just get revealed to the requesters. It can only happen within the confines of the code they've embedded into the enclave. So those guys are using it. We're using it in the bridge. David and the enclave team is using in the enclave cross product, and he alluded to the new stuff to potentially come in the future. But expect to see more and more of these technologies. And it's not just SGX. It's generally secure enclaves. AMD has their own version, so it doesn't have to be SGX. It could easily be something else. All right. There are expectations within the community that the 2000 of AUX will drop for the validator requirement. Is there a way to decrease this amount without the governance feature? Yes, if everybody decides to change the code, then you can change it. Oh, that's my picture. That's like somebody gave me that as an NFT. It's like kind of weird though. Like look at me and then look at that picture. That's
Is that you?
That's a more Turkish guy. Like look at his eyebrows and look at mine. Look at he has straight hair. I have curly hair. That NFT, yeah, they gave it to me. That's I forget which NFT series that was, but someone gave it. I like it, and Selçuk has adopted it. It's all cool. Yeah, Selçuk, that's a good question. I want the number to, or I don't know. We're talking about reducing the number. None of these things, nothing whatsoever, no change can happen without the community's acceptance. So it's not up to anyone. We simply, I write code, but if I write bad code or controversial code, it will not be adopted. So to avoid that, we need some kind of a mechanism for deciding on what the outcomes should be of these social decisions, and we plan to have the governance feature for that reason. Can a huge increase in the number of validators harm the network? No, it can't. And the inability to validate nodes, what does that mean? No, we can always validate nodes or whatever. We have a notion of what the code is already protected against misbehaving nodes, right? It can deal with some percentage of the nodes being Byzantine. So yeah, don't be worried about that. That is not the concern. But as with any new code base, if you start to change its operating parameters, take it out of its envelope, then you might run into issues. We might find that a linked list that we have somewhere needs to be modified, etc., etc. So you don't want to go from, let's say, 2,000 validators to 2 million validators overnight, guaranteed to kill your dev team. They will hate you. They will discover all sorts of issues the next day, and they will have to work overtime to fix it. So you want to do all changes gradually. That's why every time I talked about the proposed governance feature, I mentioned limits. So you shouldn't be able to change any parameter, and you shouldn't want to change any parameter by too much, right? So if you do, then there will be all these stresses placed on the system, and you don't want to do that. Okay. Being a validator has huge benefits that aren't fully realized yet. Yes, that's absolutely true. There are lots of benefits, and if you are one, that's great. Good morning to everyone. Kasaf is saying, so we dropped the price of AVAX so that everybody could be a validator. I know that the entire space, the price of all coins went down, and it's it is what it is. So excited to build an Avalanche. Can anyone ask a question to David, please? I'm just scrolling here.
No.
The difference between Avalanche and Aptos, yeah, I'll talk about it someday, but not today. Obviously, we're superior. Just look at Aptos. Like, the world doesn't need that VM, and they've got nothing else going for it. And their consensus protocol was invented by my student and co-founder of Avalab, Ted Yin. So, like old tech. You want to go to old tech? Sure. All right, GM everyone. Core app is so smooth. Thank you. Ooh, question for David. Is any of the Enclave markets patented? How long do you anticipate it will take competing FEXs to spring up? That's a good question.
Yep. So Enclave Cross, we did submit a patent application that's public, so you can search for that. And then I think we have one other patent submission. So you can that's all publicly available.
Let's talk a little bit about patents for a second. So there are all sorts of ways to view this. In crypto Twitter, somehow everybody hates patents. And that's fine. My heart goes out to you. I know why you hate patents. I hate patents for the same exact reason. But you can't just hate something. It's especially if that thing is going to come back to haunt you. The number one, I know this number from 2.5 years ago, right before the pandemic. Cornell Blockchain Club had some patent attorneys come in and talk to us, and they showed with numbers, and I don't think the trends have changed at all. They showed with numbers that the number one patenting entity in the crypto space is, David, do you have a guess who that could be?
Number one crypto entity or patent entity?
Number one
Coinbase?
entity getting crypto patents, not number one crypto entity, because it's not going to be a crypto entity. If it were a crypto entity, that would be fine.
I do think I know this. It's like a big bank, right? It's like a TradFi bank?
It's Bank of America.
Bank of America.
They are the ones. They're eating up everything you and I talk about on this podcast that isn't patented. Somebody will come after us and they will mop it up. And some of these are patent trolls. Some of these are large institutions trying to protect what they are about to do, so because they don't want to be trolled. But someone out there will feed off of our intellectual crumbs. They're kind of like remoras attached to sharks, right? Those little stupid fish. The shark eats other fish, and then the pieces dribble down, and then this little stupid thing that's attached to the bottom of the shark eats the rest. That's sort of what's happening here. And if you don't patent the stuff you invent, some other jackass will come in and get your patent for you, and then you will have to go to court and fight for your own life against some idiot who just listened to your podcast and submitted stuff. So I assume that this is a defensive patent, right?
Yeah, exactly. Yeah, it's for exactly the point that you mentioned. So a large bank files one, and we're operating, even though if it was our idea, that they could, in theory, shut us down. So just defensive.
Exactly. Okay. Did anybody ask about the shitcoin that was dropped in our core wallets? No. Coin drops happen all the time. So it's something. A lot of my friends are like, hey, who's behind this? I have no idea. I get those coins too. don't Google them. Some of them are just scams. They send you some URL somehow. You'll go to his URL, and then they'll take your money. Or you'll Google, they'll send you to a lookalike of the wallet, and then they'll make you type your password and mnemonic and whatnot. Don't be doing any of those things. Be very careful. Okay, so we had to check. Yeah, we had to check the newspaper every morning to see what's happened with our stocks. Trading before the internet was a whole different game. Yeah, remember the Wall Street Journal, the middle pages? David, do you remember those?
The middle pages of the Wall Street Journal? What?
Yeah,
I
like
mean,
the quotes.
I used to get the physical one. Yeah.
Yeah, the physical one, right? I remember getting the physical one during the .com era, and my friends from grad school would be featured on it. And then, of course, there was the whole above the fold, below the fold. Like, so and so was featured, but he was above the fold, so he's cooler than the other person.
Yeah.
Anyway, so yeah, no, all the middle of the whatever section C or something was full of the fund quotations, was full of the options numbers and so on.
Mm-hmm.
And it's totally different than what it is now, and it's going to be unrecognizable in 20 years. It's just going to be AI traded, lots and lots of AI backed by blockchains underneath for the trading and systems like what David is offering. So that's what's gonna happen. FEX is the new DEX. Yes, that's correct. Will Enclave Markets liquidity for decentralized exchanges be able to provide dominance? For example, will it complete a liquidity arbitrage? I'm not sure what the question is here, but can you use this thing for ARB?
So because we're using a theoretical market price, you could trade against that because you have a bid and ask on various order books. So if you could trade the bid and the ask on Binance versus the midpoint that we have. I mean, that's all, it's not nefarious or malfeasance or anything. It's just, there's a price difference opportunity, just like any cross exchange arbitrage. But that's really the only ARB that that we're aware of, because we don't have a bid ask spread. It's just one price. And the liquidity is only on one side of any trade. So,
got it. Okay, Crypto Kindergarten. Yet another question from him. So many, myself included, do not have the technical acumen to confirm that this system is truly trustless and that preferential treatment is impossible. This is a great question. Do you foresee this as a hurdle in adoption? And I think that's a great question. So we made a bunch of claims. I'm saying, hey, only those things that are in the code will happen because that's what attestation proves. You're saying we only put in, the best price guarantees into the code. There is nobody who can come in and jump ahead of the queue, and there isn't a special socket, that you can connect to this enclave.
God mode, right?
Yeah, God mode. There is no God mode. That Kevin can come in or what's Kevin is not an enclave, but a Kevin-like figure, let's just say. So tell us, what guarantee do I have that this is true, especially if I can't read the code?
Yeah, so this is where the role of the attesters come in, and it's a pretty important one. And so, in the same way that we, as the exchange operator, system administrator, don't have unilateral access to tamper with the code base or access the private keys for the wallets. The attesters each will hold basically a share of the keys. So you mentioned the Avalanche bridge, same model. They do have access to the code, and they will be reviewing it from an independent perspective and giving the thumbs up and saying like, yes, this, all the claims, the promises are true. We have no reason, to not, tell the truth here. Similarly, we're going through, various different audits. So we're going through our Trail of Bits audit right now. So we can, publish that. And, so we're having several different types of reviews by people who are not ourselves. So we're removing that single point of failure that exists in the centralized model. But there are, parties who are reviewing it and giving a thumbs up and saying this is accurate.
So there are two things going on. One is independent security reviews, independent firms that are putting their own reputation behind the line, saying, hey, I have looked through this code, and this code indeed guarantees best execution, no front running, no sandwiching, non-custodial, And so those statements stand alone, and they come from people who have extensive experience reading code. These people are amazing, by the way. Oh, by the way, I should mention this to this crowd. They might not know. We use some of these firms for technical review of the Avalanche Go code. And before we went and opened up mainnet. And we did something that nobody else had done before, as far as I know, and nobody else has done since. Before we submitted the code for review, we put in some incredibly subtle bugs into it. And it was really fun. It's kind of like obfuscated code contest. So me and some of the top leads worked really hard to squeeze in some really subtle, really complex bugs, and they found a huge percentage of them. I was thinking if they find one of these, they are amazing. They're at the level of a master's student. If they find two, they are like they should be granted a PhD. They found an enormous percent. I forget the percent number off the top of my head, more than 50% easily. Like the super majority of the bugs were found. I was flabbergasted. So, yeah, people audit contracts all the time. Then those contracts get hacked later on. That's true sometimes. But in general, at least my experience with this is that these people work incredibly hard. And they are incredibly effective at finding issues. So, and in this case, this was malicious people trying to, or not malicious, but people trying to hide bugs, and they managed to find them. So, so there's external reviews of this kind, plus the attesters, whose job is to also ensure the exact same thing and ensure that the code is running the exact right hash, etc., etc. So
Exactly.
You do not need to read the code for yourself. There is a lot of independent verification that's doable, that is taking place by experts. The dark pools that work in TradFi work with well understood and fully integrated TradFi assets. Yes, you're building for an asset class that doesn't have the same user base today. Yes, Crypto Moon. All right, this is a long wall of text, but let me read it. I think he's on to something though. Separately, dark pools only work if there is consistent and reliable two-way activity. True, all true. So most of these dark pool solutions only work within banks today. That's also true, and that sucks, actually. That's a problem. Given the entire world is already onboarded, have credit with them, and is a client. While the underlying tech is seemingly cool, it's not seemingly cool. It's actually genuinely cool.
It's pretty cool.
We can disagree on that with Crypto Moon. Clients, traders, funds only care about risk and ability to execute quickly. Hey, fully on board. I think he is exactly right, and it's very insightful. How will you deal with the lack of client base and/or deal with the inability to fill people quickly? David, this is such a great question.
It's a great question. So, I mean, this is common with any sort of, exchange marketplace, or really any network. It's the classic sort of network effect. You need people to use it, and then it becomes beneficial the more people that use it. And so, you're right. Like, without showing the order book, a typical exchange could say, hey, look at the order book, look at the depth, look at the, our competitive pricing, tight spreads, all those things. We're not advertising that, right? And so, so for us, it's going to be a combination of, going for, individuals. And we think that there are a lot of natural users of this. And so that's sort of like the direct channel. But then there's the indirect channel of going to the one-to-many. So we're going to various different, like prime broker desks to reach the long tail of institutions and custodians. So what we need to be is sort of everywhere to bring market participants here, because we hear a lot from people that, hey, this is super useful. And it will be very useful if other people use it as well. So our job is to go out to the long tail of both individuals and institutions who want to use this. And in the meantime, we're doing things like coordinated crosses to say, like, okay, everybody submit yours at this time, and sort of like a crawl, walk, run approach. So that's the idea behind this the beta launch that we have here. But we do think that the value proposition is so strong here that and we've had enough feedback that we will get to that point where we have enough network participation that it is very robust and useful. It does depend on longer term holders who are willing to have resting orders, but that market participant is out there. Not everybody is a high frequency trader. In fact, most market participants are not standard market makers, but they actually have longer term views, and they're willing to move in and out of positions over time for these value propositions of protecting against information leakage and slippage.
Great question. So Crypto Moon, that was very insightful. Thank you, David. And liquidity is going to be a problem for any exchange, right? So CZ lives and dies by liquidity. Coinbase, any given exchange, their main game is to get as many users as possible, because that's what builds the value. And maybe it's not exponential, maybe it's not squared, but there's certainly a non-linear thing happening with volume. The more you have, the more you get. And nothing was built in a day, and nothing starts out fully fleshed. So this is very early, and and I'm sure David is going to try everything under the sky to drive traffic and create more liquidity on here. So I think this brings us back to my other question, which is when airdrop went on. No, I'm kidding. Or maybe we're not kidding. I don't know.
We're ready.
Right.
We're ready.
Okay. Kevin size. Can you tell us about AVXT, the first play to earn game? It's not. Is it the first play? I don't know. No, I don't want to talk about AVXT right now. I have David. Okay, let's see. Governance. When is it coming? Can we decrease the limit of, the Banky? I don't know anything about the Banky limits. That's a Banky question. David is unlocking the next billion people. Are you, David? Is that what's going on?
Hopefully. I mean, yeah, certainly anybody, as long as it's not a jurisdiction where we can't operate, we can onboard anybody. So this is not just for the highbrow, as Gün mentioned. It's for everyone.
So David, you weren't really clear about the actual price at which the match occurs. Can you the theoretical real market price of a coin like BTC? I think Bilge is asking about this. So tell me about what that really means to you.
Yes.
So when Kevin and I match for like $1 billion Bitcoin exchange or whatever, whatever's going on there, in our hypothetical example, what price are we trading at?
Yes. So we're using a mechanism called a pricing oracle, which is fairly common. There are many pricing oracles out there. Some are, on-chain, Chainlink and Pyth and things like that. And then there are off-chain price aggregators that look across all the various exchanges. In our model, we're using an average of the midpoints across various different venues that represent a majority of the liquidity in this space. And we'll continue to, refine and build that out to make sure that it truly does represent, 95% of all of the, venues and liquidity in the market space. But yeah, so it's nothing that happens on Enclave cross will impact the price. It's just an average of the midpoints across various different venues. Which
venues again? What are the venues today?
Yep,
if I am on this list, I just got whitelisted, right? So if I go there to buy some BTC from Kevin or whatnot, assuming he's selling BTC, I don't know what he's doing, but so suppose I go there right now. What's the oracle structure?
So right now it's an average of the midpoint between FTX and Binance, which represents a majority of the liquidity. But we're going to add in a bunch of different data points there, and then we'll have logic to kind of like throw out things that are outliers and get to make sure we're at the true theoretical mid there.
The theoretical, there's no such thing as a true theoretical mid. I think
right.
That's
no, it's just an average. Yeah. In equities, they would call it like NBBO, right? Or there's like a reference rate or something that doesn't exist in crypto. So we're trying to do an average of all those things.
Yeah. Okay, perfect. So good. Okay, so that's I think a clear, crisp definition. Let's see. I think we've run to the end of the questions. We've also run to the end of our allotted time and gone past, as we always do. I greatly enjoyed this. There are a whole bunch of comments here off topic, but core is awesome. Thank you. I guess that's one of the messages that I want to leave with. Try core. It's really nice. It makes DeFi so much easier, so fun to use. Go play with or go look into Elastic Validator's Elastic Validation. It's coming up in Banff, or it came up in Banff. It's going to be even easier, better with Banff 1, Banff 2, etc. Those are all essentially fixing up small inefficiencies. But check it out. So you can become a validator in multiple subnets. There's going to be a burgeoning validation scene. Take your part in it if you could. Those are my two messages. But David, why don't I let you wrap up your discussion? Are there like parting thoughts, things you'd like to tell the Avalanche community?
Yeah, I just want to say thanks so much for having me and talking about this important new innovation on the exchange marketplace. So thanks all very much for listening, and please do come, and we'd love to get your feedback. So trade.enclave.market is the product itself, and then you can submit feedback to support@enclave.market, or you can go to the site Enclave.Market. And we really look forward to onboarding. We have a Telegram channel as well. So join there, and we are very excited to start onboarding everyone off the wait list. So thanks for your patience there, but yeah, excited to have your feedback, and thanks again.
Thank you, everyone. Thank you, David, for joining us and sharing your valuable time. Thank you, everyone, for the insightful questions. Those were great. Let's grill other people next. David was very, very kind, and he answered, I think, every single question that was directed to him. So I'm excited as well. I will be at Avalanche Create next week. So I'm headed down to Berkeley. There's a whole hack house there, and I think the people who are participating have been selected. If you're going to be there, come join us. I can't wait to see you, meet you, hear about your new innovation. There'll be a bunch of other people who are looking to invest in some of these things that come out of the hackathon. There'll be a bunch of people who just want to get to know other people, to build a bigger team, better team, to do the next thing, etc. So it's going to be a great scene. I'm excited. I haven't been in the Bay Area in a long time. No, that's not true. I was there just maybe 3 weeks ago. But I haven't had much time in the Bay Area to spend with hackers in a long time, and I cannot wait for Avalanche Creates. And then after that, we're going to replicate the Creates episode around the globe. So there's a very full calendar up ahead. There'll be one all across all of the, maybe not all of the continents, but across all but Antarctica or something like that. So we're going to go around and replicate that scene. So come join us if you are in the Bay Area. And with that, thank you very much. I will not be meeting you next Friday because of Avalanche Creates, but I will be doing this probably on the Monday afterwards, and it should be a lot of fun. We'll have more guests in future episodes. I hope you enjoyed this. Thank you all again. Thank you, David, very, very much.
Thanks, Gün. Thanks, everyone. Talk soon.